Obviously, the biggest issue that will be troubling New Zealanders after the election, as is troubling them now, is the cost of living. And a good part of that are mortgage and interest rates, obviously, and not just the price of stuff, but also what I'm paying for the residential accommodation that I am in, whether I'm renting or whether I own. The Reserve Bank is expected to announce no change today to the official cash rate, but what it does after the election is still a bit of a movable feast, particularly if there's a change in government you expect. And the National Party have said that if they get in the first 100 days, they will send instructions to the Reserve Bank to be much more direct in terms of using monetary policy and interest rates to fight inflation, and that no other consideration should occupy the Reserve Bank Governor. To talk to us, though, about what the real estate, or the current state of the real estate market, and also give us some insight as to what might happen after the election, depending if there's a change, we're joined by Vanessa Williams from realestate.co.nz. Vanessa, welcome. And just before you start, could you tell me what realestate.co.nz is?
Certainly, Michael. Well, thank you for having me on. Realestate.co.nz is a platform that markets properties for Kiwis across New Zealand. So you might liken us to the likes of Trade Me Property. We're a competitor to them to make sure that there is a cost-effective way that Kiwis can market their property in New Zealand.
Right, so if I'm going to buy a property, I also go onto your website and I can see what's available as well.
Absolutely, yeah. We mainly focus on people who are searching for property, but we obviously list all of the properties from the real estate agencies across the country. The only difference is we don't have private sales on our site, as there's a lot less legislation around it, and we just see it's a bit of a risk for Kiwis, so we don't service the private market.
Now, you also do market insights, if you like, and that's, I guess, what we're going to talk about today. You've just released your latest, I think, survey. Do you do them quarterly or monthly?
We do them monthly, so we look at all of the properties that came onto the market during that month and compare it to the same month last year. We look at the total pool of homes available, so whether they were listed last month or 10 months ago, and then we also look at what those average prices are of the properties that are coming onto the market, because it tells a bit of an indicator as to what is happening with prices. Because as you can imagine, when a property comes onto the market, vendors are asking for a price. What that might sell for can sometimes be different depending on how much demand there is and how hot the market is. But we talk about asking prices, which typically leads the trend as to what happens with sale prices.
Okay, I'm just looking, just take an example. I'm just looking at Wanaka, for example, which has largely been immune from many of the drops in prices or median prices over the last wee while, but I see it's not entirely now. But I'm looking at the gap between the medium asking price in a place like Wanaka, which is 1.7 million, and then the medium sale price, which is about 1.2. It's a massive gap. Does that mean that out there, people who are selling their house think their house is worth more than it really is?
That's basically exactly what it's telling you, yes. We actually see quite a gap, and that gap becomes closer depending on how hot the market is. So at the moment, I think there's probably some vendors out there or people are looking to sell their house that are thinking, oh no, a year ago or 18 months ago when we were at the absolute peak of the market, which was about January 2021, so beginning of last year, there was a lot of people still living in hope that that's what their house is worth, but that was a completely different market 18, 20 months ago, and now we've got to bring vendors and buyers together, and that's effectively the real estate agent's job, is to find a buyer for a property and go, okay, Mr. Vendor, now we need to work out what this buyer can afford.
And I guess there are a number of things that make up what I'm going to pay for a house, but one of those will be also, and obviously a major, if I can get finance for it, and what I'm going to pay in terms of interest rates. Have you noticed since interest rates have gone up that this has had an effect upon the property market in general?
Yes, absolutely. So as soon as it's actually before it even was announced or actually confirmed, when the Reserve Bank started talking about putting the OCR up, which would then impact interest rates, we certainly saw the markets basically stop. So that growth, it was grow all through 2020 and 2021. And then at the first month of last year, that was our peak that we hit in terms of the national average asking price. It hit $1 million. And we're now sitting at 871,000. So it's around a 13% drop since the peak of the market. But essentially, as soon as the Reserve Bank announced that they were even going to look at interest rates, it stopped that growth in price. And then we saw it basically decline all of last year. It's been relatively flat during 2023. So we've sort of hovered around that 850, 870 mark pretty consistently for the last 10 months. But yes, certainly that had a massive impact on the property market, especially on prices.
Now, if I'm selling my house at the moment, Vanessa, I guess there's a certain faith, I guess, in that eventually it will sell. Are people holding off making a buying decision in part because there's an election in 10 days' time?
There is a nervousness at the moment. I wouldn't say there's certainly transactions that just have to happen. Life circumstances change. People's ability to service mortgages, upsizing, downsizing. There's an element of that just has to happen, and I would argue that's around 4,500 homes every month, because that is about how many have been transacting on average across the last 10 months, so during 2023. We would typically see that sit between 6,000 and 8,000 homes. So if I was to sort of wrap a bit of an idea around that, we can probably assume that there's around 4,000 homes that needed to transact for whatever reason, but there's sort of probably be around another 2,000 or 3,000 homes each month that people have, rather than having to do it, they have gone, do you know what, we'll actually hold on this because I'm not certain on interest rates. Cost of living is a challenge, and if I move into a new property and potentially uptake a new mortgage, I might be having to pay more. And also, you're right, we have got an uncertainty around the election. What we typically see, though, is it's not necessarily what happens in terms of the political party that wins at the other side of that. It's just the fact that there is a decision. There's one less certain element in the mix when making the property decision. And so typically Kiwis will sort of pick up and carry on. But yeah, the interest rates are a big one for us that we didn't have in the last election in 2020.
No, and I guess that sort of answers the next question I was going to say. If from a real estate industry point of view, and I'm not asking from a personal one, but if you were just looking at it from the real estate industry's point of view, are you better off with a centre-right government or a centre-left government, or doesn't it matter?
I mean, it totally depends on which end of the spectrum you're at, right? Because if you look at some of the national policies around opening up Overseas Investors Act to $2 million or above, people who've got a $2 million house, that's going to increase the demand should they choose to sell. So that's going to be a positive element for them. However, there is talks around National Act removing the support for first home buyers and those first home buyer grants. So I think that's a real challenge for continuing to get people onto the ladder. So it depends sort of at what area of the spectrum you are in. And just looking at those pools of people, so I took a look this morning, and around 7% of the listings that are on our site at the moment are over the $2 million mark. However, there's about 14% that is $500,000 or below. So you can kind of see that there's a greater supply at that end, but there's at the lower end of the market, the demand far outweighs the supply, where it's not the same at the other end of the market at the $2 million end.